Hello everyone, this is Dr. Ramandeep Kaur, Assistant Professor, Department of Commerce from the Bhopal School of Social Sciences, and today I am going to discuss with you the theoretical part of budget and budgeting. So in this video, we are going to understand the meaning of budget, meaning of budgeting and the different types of budgets. Now first of all, let us understand what is the meaning of budget. So a budget is the monetary or quantitative presentation of business plans and policies to be pursued in the future period of time. Thus, a budget is a business plan that is being prepared for a specific time period of future. There is another definition of budget that is being given by ICMA London, that is Institute of Certified Management Accountants, and they say that a budget is a financial statement prepared prior to a predetermined period of time of the policy to be pursued during that period for the purpose of attaining a given objective. Thus, a budget is a quantitative statement that is prepared in advance to achieve a certain target of the business. Now, after analyzing these definitions, let us understand what are the features of a budget. So, the first feature is it is prepared for a definite future time period. It is prepared for a specific period of the future. Then it is a special form of statement expressed in quantitative terms. That is, whatever items are included in the budget should be capable of converting in terms of money. They should have a monetary value, or you can say they should have a physical units. Then it is being prepared with a view to obtain a definite objective or business target. Another feature is it expresses the plans and policies of the management to be pursued in the future, and if these plans and policies are implemented well, obviously it acts as a base for measuring the success of the business. So after understanding the features, let us understand what is the meaning of budgeting. So a budgeting is a wider process which includes preparation of the budgets, budgetary control, budget coordination and all those activities that are related with the budget. Thus, to understand it in short, budget is basically a financial statement that is prepared in advance for a specific future time period, and budgeting is the process to prepare the budgets. After understanding the meaning of budget and budgeting, now let us understand what are the different types of budgets that are there, or what are the classifications of budget. So budgets can generally be classified on three categories. First, on the basis of the time period, second, on the basis of the flexibility, and third, on the basis of the functions. On the basis of the time periods, budget can be classified into three categories: long-term budgets, short-term budgets, and then is your current budgets. Now, long-term budgets, as the name suggests, they are related with the long-term planning of the business. That is, they generally focuses upon the long-term expenses of the business. The time period for such budgets varies between 5 to 10 years, and these budgets are generally prepared in terms of physical quantities. Now, the example of long-term budgets are like your capital expenditure budgets and your research and development budget. Now, another type of budget is your short-term budget. So, as the name says, short-term budget is a budget that generally focuses upon the short-term expenses or the medium-term expenses of the business. Now, this is the budget that is being prepared for a period of 1 to 5 years, and they are always prepared in monetary units and are more precise than the long-term budgets. Example of the short-term budgets are your material consumption budget, labor utilization budget and the cash budget. So, on the basis of the time period, first category was your long-term budget, second are your short-term budgets, and the third category are your current budgets. Now, current budgets are, you can say, a special kind of your short-term budgets only. They are a special kind of short-term budgets, that is, the time period extends from 1 month to a maximum of 12 months. And the main objective of preparing this kind of budget is to make adjustments in the short-term budgets according to the current conditions. For example, the economic situations may change. There could be inflation, there could be depression, which could affect the demand for the company's product, or the demand for the company's product may get affected budget due to launching of a new product in the market by the competitors. So these kind of budgets accommodate all the different kind of changes that happens in the business plans as per the changing market dynamics. So these are very important category of the budgets. Now second classification is on the basis of flexibility. Now on the basis of flexibility, budgets can be classified into two categories. First are your fixed budgets and second are your flexible budgets. Now fixed budgets, as the name suggests, they are fixed in nature and they are also known as static budgets. That is, they do not account for any kind of change that happens in the business conditions. Now these are the budgets that actually are prepared for a single level of business activity and they are generally most suited for the fixed expenses. We all know the meaning of fixed expenses. Fixed expenses are the expenses that do not change as per the level of business activity or they do not change as per the volume of the output that is being manufactured. They always remains fixed in nature. So fixed budget generally concentrates upon the fixed expenses. There is a definition about the fixed budgets that are being given by ICMA London and they say that fixed budget is a budget which is designed to remain unchanged irrespective of the level of activity that is actually attained. Now another classification of budget is your flexible budget. Now flexible budget is that budget that presents the changes. This is the budget that presents the changes in the cost, revenue and profits at various levels of business activity. Thus, a flexible budget is a statement that shows the total amount of cost that is incurred and the total amount of revenue that gets generated at say 50% level of activity, 60% level of activity, 70% level of activity and so on. Thus, it presents a complete picture in front of the management that for a given level of activity, what is the total cost that will be incurred and what is the total profit that gets generated. So it helps them to basically do a perfect business planning. Now ICMA London has also given a definition of flexible budget and they say that a flexible budget may be defined as a budget which is designed to change in accordance with the level of activity that is being attained. Now after this classification, let us understand the next classification of the budget, that is as per the functions. Now based upon the functions, budgets can be classified into two categories. First is your master budget and second is your functional budget. Now master budget, as the name suggests, it is a consolidated summary of all the functional budgets that we are going to see, of all the functional budgets that will be prepared in a business organization. Then it depicts the picture of the total plans during the budgeted period and it covers the information related to production, cost, sales, profits and so on. The second category is your functional budgets. Now these functional budgets are also known as departmental budgets since they are being prepared by different departments and they are also known as subsidiary budgets. Now let's have a look upon the different functional budgets that are there. First type of functional budget is your sales budget. Now sales budget is a budget that is basically being prepared by the sales department or the marketing department. It is a forecast of the total sales during the budget period and it presents the sales projections in terms of quantities, that is units, value, period, sales area, product, etc. After deciding upon the total number of units that will be sold in the market, those many units have to be manufactured as well. Thus, after preparing the sales budget, production budget is prepared to forecast the total output that will be manufactured in a given budgeted period. So, it is the forecast of total output of the whole organization broken into estimates of output of various products to be produced during a budgeted period. After preparing the production budget, the cost budget is prepared because cost will be incurred if that many targeted units have to be manufactured. So, cost budget, it presents an estimate of the total cost that is being planned for a budgeted period. And basically this cost budget can be divided into 4 subsidiary budgets like your direct material budget, direct labor budget, manufacturing overhead budget and plant utilization budget, focusing on the 4 major expenses that are being incurred while manufacturing of a particular product. After that, next type of budget is your cash budget. So cash budget is a budget generally that is being prepared by the finance department, and it is a statement which gives an estimate of the anticipated receipts and the anticipated payments within a given budgeted period. Remember, these are not the actual receipts or actual payments, they are just the projected figures, they are the anticipated receipts and anticipated payments. So with the help of cash budgets, you can understand the total cash inflows within a given period, and also you can find out the total cash outflows within a particular time period. And at the end, you can arrive at the balance, you can arrive at the cash balance whether it is surplus or whether it is deficit. In case of surplus balance, management can actually plan where the surplus cash balance can be invested, and in case of deficit cash balance, again the management can plan, they can look out for the sources in advance from where the cash could be arranged for later. So this kind of budget is very important type of functional budget. Next type of functional budget is your capital expenditure budget. Now capital expenditure budget presents the capital expenditure during a particular budgeted period. Now capital expenditure is an expenditure that is related with the fixed assets. So this budget gives an estimate of the total amount of capital that may be required for purchasing the fixed assets that are very much needed for fulfilling the production requirements. Then in the last category, that is the others category, you are having a very important type of budget, that is zero based budget. Now this budget is very much different from the traditional budgets, as it does not takes into account the previous year's expenses or incomes. It is being prepared from scratch, or you can say it starts from zero. The reason for starting this particular budget from scratch, or you can say the reason for starting this particular budget from zero, is that whenever you need to add every expense in a particular budget, you have to present a complete justification for that particular expense, why it is being added in this budgeted period. So this process actually helps to reduce the unnecessary cost by looking at the areas where cost can be cut or where cost can be reduced. So these are the different types of budget classification on the basis of functions. So in this video, we have understood the theoretical part of budgeting and the different types of budgets. Thank you so much and have a nice day.